Hello and welcome to Crux Investor. We caught up earlier today with Vincent Metcalfe, CEO of Nomad Royalty. We spoke to him last October, so we're keen to catch up and see how things are progressing, what the plans are for 2021. So if you want our thoughts on the conversation, what's been happening in the marketplace and indeed the company, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of companies and commodities. There's a training course or two to help you with your diligence, and of course summaries of other interviews that we've done just to save you a bit of time. And if you'd like to join a thriving community of intelligent investors sharing their thoughts and ideas with each other in a nice safe environment, in a nice polite and civil way, you can join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, be much appreciated. Leave your comments below. We get back to absolutely everyone. And of course, if you want to see what we talked about today, take a look in the description. Vincent, how you doing, sir?
Very good, thank you.
Long time no see. So I think I saw you in October. How have you been?
It's been pretty busy. The end of the year was obviously, we had a lot of things going on, and I would say that that is translating well into 2021 now. So I would say that on the, pipeline point of view, corporate development, things are going, even better than we expected. So it's, looking forward to what 2021 brings us.
Fantastic. It's not going so well. Your share price, what's happening?
It's not where we want it to be, but I think at the end of 2020, we had a lot of different things that came together that probably created a bit more pressure than we expected. We had Yamana that came out with a secondary of our shares, and the timing of it at the end of December when funds are closing the end of the year. And we also had, I think, mixed to that, a bit of tax loss selling. Obviously created a bit more pressure on the share price than we expected. But I think the main thing is to remember is, we're making money every day. Our assets are going very, very well versus where we were in May when we first started trading. We've de-risked the company even more. We've put a lot of things in place to really build a real business. We've got now our dividend policy that's there. We have our credit facility that gives us, capacity with the cash on the balance sheet of around $100 million to look at bigger deals. So you know what? At the end of the day, yeah, the share price is not where we want it to be, but we're doing and taking all the steps that we need to take to build a real business. So am I concerned? No. Do I think about it? Yes. But if we keep executing on the plan, we're definitely going to get the value in our shares, and then it won't take too much longer.
Okay, so let me look at some of the examples you gave there of why that pressure is there. Yamana, just explain what went on there, because obviously they're sold down. That the optics don't look good there. Why are they selling down?
So I think that's it's something that we need to take back to when we actually first started the company. When Yamana put those non-core assets, the royalties for sale, their first ask to every bidder was $30 million in cash. We went through the process of buying those assets with the intention of giving them $30 million in cash on closing. As you remember, something happened early last year called COVID and the pandemic financial crisis, exactly when we announced our deal at the end of February, early March. So instead of raising what we thought would be $25 to $30 million and paying them that money on close, we were only able to raise $10 million and give them $10 million on close. Obviously, being a big company, Yamana still had that line item in their budget to say we need to realize and crystallize $30 million of cash. So the $25 million Canadian of secondary that happened at the end of the year, answered that. So with the $10 million we gave them originally, plus the $25 million Canadian they were able to realize at the end of the year, that's that $30 million. So the rest for them is optionality, and they're going to sit on it. And, it's at the end of the day, we're back to where we thought we would be in April when we had the intention of raising 30 million. And Yamana is exactly at the same spot. So, but with a much more de-risked business.
Right. So it was known, as far as you're concerned, expected, and they worked with you in the process to allow you to get it into the hands of people that you wanted to get it into. Is that what you're saying?
Exactly. So obviously, I think the first, the process of doing these things is never, very black and white. So it took a bit of time to get, the proper funds in the deal. But I think that's something that's very important. Also, is when we first, started trading, our public float was only 6%. As we sit here today, we're over 20% now. With that $25 million that we placed, half of that went into the hands of institutional. And most importantly, half of it went into the hands of retail. So we went in with a very, very big syndicate. I think we had like 12 or 13 brokers, all with very good retail networks. And we really pushed on those brokers to push those shares into the hands of the retail system to really increase that liquidity over time. And going back to the institutional front, we were able to get, I think, nine new funds into the stock. And with the timing of it, obviously, they didn't come in with full positions. So the expectations is that those funds in 2021 will keep building out their positions and obviously support the stock over time.
Okay, and so let's just remind ourselves the numbers. So Yamana cashed in how much in dollar terms?
$25 million Canadian at the end of the year, plus 10 million US on close.
Right. Okay.
Of the first transaction.
Okay. And you said that they will sit on the balance. They went from how many shares?
So they were at 13.3% prior to the deal. Now they're at, if you convert their convertible loan, they're at just over 10%. Without the convertible loan, around 7.5%.
Right. And when you say they're going to sit on it, are they obliged to contractually, or you just hope that they will? Is there an overhang?
So based on the deal that they just did, they still have, I think, a 3-month lockup. But then after that, they could do whatever they want. And truthfully, I think what we'll make sure we do is make sure that we understand their intentions, and that we, again, bringing more liquidity to our stock is going to be a very big positive for us. You've seen some of our peers get included in the JDXJ, and those, catalysts for those companies have been incredible. So that's something that's also on our radar screen, is making sure that we keep improving the liquidity, the public float of the company, to have that optionality of perhaps getting into those indices in 2021.
Right. Okay. You talked about end of year being a factor. End of year just because of tax loss season. I mean, if you're mostly institutional, is that what happens over there as well?
Well, there's tax loss selling. I don't think that was necessarily institutional selling our stock, but we did close a lot of different deals. I mean, we if you look at our share price performance from the outset, we went up to, I think, $1.90 at one point. So there was a lot of people that probably picked up shares during that rise. Was it, maybe that was some of those shareholders selling and looking to buy back in 2021. But we also did a lot of different deals. We acquired Coral Gold, which was a big basket of, I would say of shareholders in the US and in Canada. So maybe they were crystallizing gains off of that acquisition. And then we also had Troilus and Moss, which we also bought, which had a few shareholders attached to those deals. So I would say it's just a conjunction of things. And then you add the volatility that we had on the gold and silver price, and also what was happening on the US side of things in terms of the elections, creating a bit more, I would say, instability within the market. It created that perfect storm.
Okay, so let's talk about what you're going to do about it, because when we spoke, you're about 850 million market cap. You're just under 600 at the moment because of what's happened in and around Christmas period. I guess the US election hasn't helped the market really. And it's interesting, actually. What's your take on the precious metal markets, the way that's kind of pulled back? Because you're precious metal focused.
Yeah, well, look, I think with everything that we're seeing in the world, it definitely points to higher precious metal prices in the short to midterm. Whether, and I think from a sustained point of view, I think we're going to see higher long-term prices on the gold and silver fronts in the years to come. I think right now, we're sitting at $1,600 being the long-term gold price. I'm way more aggressive in the way I look at the world. I think we'll probably end up with $1,800, $2,000 gold prices going forward in 3 to 4 years. I think it just hasn't been reflected in the market yet. With everything that we're seeing around the world, the government's printing money and, obviously having to battle the financial effects of what the pandemic is, how it's affecting the different programs and the people in the world. I think there's definitely going to be more inflation coming, which obviously the best protection for that is to buy gold assets.
Yeah. Last time you spoke about $3,000 gold. I think you've just been a little bit more conservative about the 3 to 4 year outlook of 1,800 to 2,000.
So I think we're going to get there, but we're going to settle probably a bit.
Okay. But you'd be happy with 1,800 to 2,000 over the next 3-4 years. That for your business, that works.
Oh, absolutely. I mean, when we created the business, we were looking at 1475 long term, or actually the long term was 1380. Spot prices were 1475. Here we are sitting 12 months later with 1875 gold, and things are looking very, very good on our front in terms of the business that we're building.
Right. Okay. And talking of building businesses, one of the things you said to me last time is you don't want to be a sub-billion-dollar company. You want to be a $3 billion+ company. That's really interesting. So what are you going to do about it? Because the transactions you've just mentioned to me are small. They're kind of incidental in a way. So, are you going to be doing larger syndicated deals? Are you going to be able to, use this credit facility of yours to actually do big deals this year?
Yeah, no, look, we have our credit facility. We have $25 million in the bank. We're probably going to generate cash margins between $35 and $40 million this year. So at one point, we're going to have $50 to $60 million on the balance sheet, plus that facility, which could be expanded once we get Blyvoor and Woodlawn back up and running. So the main focus of Nomad at the moment is to bring in new significant deals, which are over $50 million in size. So if we're looking at something that's in the $200 million range, that's when we go back to that syndication theme, which we have ongoing dialogue with some of our peers when looking at some of those big deals. And we've seen some I would say super large deals in the news looking at $1 billion type streams. Those are probably still a bit too big for us. But hopefully within the next 3 to 5 years, that will be something that we'll be able to look at. But anything between, I would say, $50 and $250 million is something that is achievable from our group. Whether we do it with, on our own or with a partner, that obviously depends on the opportunity. But the main focus is really near-term cash flow, keep adding to that cash flow theme of ours, which is, really diversifying those different sources globally from, different types of countries, different types of operations, but always focused on gold and silver.
Do you think, you talked again previously about maximizing resource exposure and also to, precious metals, which is what you're at. And, your job is to minimize risk every day of the week. You're putting out little fires and taking opportunities where you see them. What scale of deals do you think you need to be completing this year? How much more do you need to add to the current portfolio to allow you to be a bit more credible? Because you're in that kind of in-between stage at the moment, aren't you?
Yeah, no, we do. I think $75 million to $100 million in terms of deployed capital is definitely something that is our main goal. If we're able to do that, I think that brings us into a different stage of really showing the market, these guys know what they're doing. They're able to deploy in, project financing or mine expansion type deals. And they have that expertise and they're able to do it and they're showing that. And I think that's also going to bring a lot of different, I would say, institutional, investors that are looking at us and saying, are they going to do it or are they not going to do it? And I think because the minute we do that, then I think we're off to the races, because then we end up getting more calls from different operators because you have that, that credibility that says, okay, you said you were going to do it, you did it. And I think it's also about tailoring your different assets. And I think we discussed that last time, the ability of our group to maybe tailor certain deals to different partners that are looking for stream financing. And I think that's something that we're seeing more and more, is the fact that operators and potential partners for us have now really come to, I would say, accepting the streaming financing. It's something that's a great cost of capital. We end up being the longest, I would say, supporter and shareholder of that mine, because once we do our investment, we're there till the end. And the cost of capital point of view is just incredible. I mean, compared to equity and debt, for every deal that you've seen printed in the last 12 to 24 months, the cost of capital is super attractive to operators.
Right. And again, I just looking forward about how you, because I always have to remind people, you're not operators, you're portfolio managers. That's what you do, right? That's the day job here. You're not miners in any way, shape, or form. But if I look at the market out there, there's a lot of companies who are getting financed that shouldn't be getting financed. I.e., people are making mistakes by choosing companies which just aren't going to make it further down the line. You guys have got to be careful. You're very careful, I know, not to overpay for things, not to over compete, because it's going to cause you problems down the line. I mean, how are you building up the team at the moment? Because last time I spoke, I think you were either 3 or possibly 4 people. To expand the way that you've described, you're going to have to get good people on board. How's that going?
Yeah, no, we were 4, I think, last time we spoke. We're now at 6. We've added on the technical front. We've added Vincent Cardin-Tremblay, who's a geologist / geophysicist. And I think that's probably the person that took the longest to really find, because there's not a lot of them that are available and that are good and that we wanted on our team. And for us as a royalty and streaming company, it's probably one of the most crucial, I would say, roles within the business, because everything starts and ends with the resource. Is the resource there? Is it not there? Operators could optimize mills and, and mining techniques, but if the resource isn't there, you have a problem. So for us, it's something that, and someone that we really wanted to focus on finding the right person. So we're very happy to have him, and he's got broad experience, in Africa, Latin America, and the US and Canada. And both in base metal and precious metal mines. So for us, I think that's even a better, I would say, de-risking factor for us, because we don't necessarily just rely on consultants. Also, we have a very, very good relationship with a lot of different consultant firms, but having that person in-house now navigate between those different consultants and making sure that they answer the right questions is something that's going to be even more beneficial to us and to the Nomad shareholders.
Does that change the parameters under which you originally set up? Because you're comfortable with certain jurisdictions, you're comfortable with precious metals. Do you see the rules under which you operate changing as you get bigger? Is that what's going to allow you to grow in 2021?
I think we're always going to keep that big focus on cash flow. But the main thing that a person like Vince is going to add is adding that optionality and that blue sky to the different opportunities that we're looking at. If you look at the last few deals that we've done, they're more on the development front. Blackwater is a Canadian asset. It's not in production at the moment, but it's backed by one of the best teams in the business, Artemis Gold. They have the capability to finance it, to build it, to put it in production. They've done it before. But the great thing about having a person like Vince on the team is that he's able to look at, say, okay, what's there now? And what's the potential for resource growth and optionality and leverage to gold and silver prices down the road? So that's where I think with, as we keep building the team, we're also building, the business. So it's focus on cash flow and then building those optionality type, I would say, assets into the portfolio.
We saw a large number of new royalty companies and streaming companies hitting the market last year. I mean, a lot of small ones, let me put it like that. Are you concerned by that? Is that just white noise? Is that causing you difficulties in getting your story out there, or, what your differentiator is?
Look, I think the more the merrier, because at the end of the day, everybody could be lucky and find something really good. I think, one of the themes that we discussed last time is consolidation. I think at the end of the day, this sector will need further consolidation. And I was listening to a few different conferences at the back end of 2020. And for the first time, some of the majors were actually saying that we might see consolidation. And I think that also speaks to, the quality of some of the companies that are coming up. But I would say that, from a competition point of view, it depends what you're looking at. Buying third-party royalties is great, but it doesn't add a lot of scale to your portfolio. So for a company our size, streaming is very important, and that's always going to be a major focus for us. What's great about a company like ours is now we've got 8 research analysts covering us. I think for the smaller players, it's going to be a bit tougher to get that traction. So I think, going back to the original question on the share price and distribution to the shareholders, I think the more, I would say support from the brokers and so on, I think the better. As the brand name, the Nomad brand name will become a bit more, I would say, a normal investable royalty company down the road. And I think for us, it's being part of that mid cap space and growing into that large cap space over time.
Why did you feel a need to do a dividend out of the gate? You did it within 1 month of trading. You're like, no, we're issuing dividends here. I mean, and the scale of the dividends is so insignificant that to be inconsequential to big or small shareholders. I mean, what's the feedback been on that?
I would say that in general, very positive. Some of them, basically invest just on the back of having that dividend. Some of them I would say, would rather see it reinvested. But with the amount of cash flow that we're having, I mean, we started the business, we had $10 million in the bank. We're now at 25, 6 months later. So we're generating very, very strong cash flows, and we've already paid 2 dividends. But we also have that line of credit that's there. So if we really need, if a business like ours can't pay $2 million a quarter in dividends, there's a problem. So, with the amount of cash flow that's going to be generating, and that's with 6 assets, we've got 4 that are producing, we've got 14 under management. So we could see how this portfolio evolves over time. But it also goes back to just the mentality of the business. We're paying dividends. Management's been buying back shares. I've bought, I think, $160,000 worth of shares since our last meeting. Remember, we're not taking salaries either. So a portion of that came through, I would say, salary payments. But all of our management team has been reinvesting in the business. At $1, this company is a screaming buyer from my point of view. And, I think we're probably closer to the $1.50 type range in terms of a normal share price. We're going to get there. It's just a matter of time. But the dividend is really what's important is you create that stability and that confidence within the market. And, we started paying it, and we're going to start growing it as well as these assets come online. And that's a track record that we want to build on. So over the next 3 to 5 years, we started with a 2-cent dividend. Hopefully within 5 years, we're at a 10-cent dividend, depending on what we end up doing in terms of deals. But those are things that we're very, very serious about. And it just shows, how we want to grow the business. So optionality is great, but cash flow is even better for us.
Okay. So your plans are to do bigger deals. You want to do bigger deals this year. Because again, if I look at your competition, you're not going to kind of stand out by doing deals like Blackwater or Coral or Moss, right? You're going to need to come to the table with something big, like you did out of the gate, right? You guys came out of the gate like blasting, right? So are you going to be able to do that this year? What would you be disappointed with if at the end of the year with? I mean, if you were if you're sub $1 billion at the end of this year, you upset?
Depends on what type of deals we've been doing, but I would say that the most important thing for us, it's always about that per share metric. I don't really care about the market cap. I care about the share price and delivering that value. So, we're going to add value to that share price. But I would be disappointed if we're not able to structure a stream this year. That would be something that means something's gone wrong. But really, I think, with everything that we're seeing in front of us, the pipeline is very robust. There's a lot of different things going on. You've seen the copper price rise. So you've seen, we've seen, I would say, operators on that front start knocking on the doors of the streamers for potential streaming opportunities on mine expansions. So, everything that we're seeing around us, there's a lot of very good things going on. And I think that's going to create a lot of different opportunities.
When do you start paying yourselves?
Well, on May 29th, it'll be 12 months. So we'll see what happens, and we'll see what we decide as a team. But look, at the end of the day, for now, it's keeping this company as flexible and as lean as possible. We will probably look at listing on the New York Stock Exchange at one point. We will likely consolidate the shares at the same time. So there's a lot of different things that we're looking at. But in terms of salary, and I think the most important thing is making sure that we have a G&A that's, as low as possible versus our peers to even, incite, I would say, investors to invest in our shares versus some of our peers.
Well, it's very generous of you, but at some point you got to reward yourself.
Well,
so how do you remunerate yourself in May? Let's say you do it then.
Well, at the end of the day, we're very big shareholders too, right? So if we keep paying that dividend, we do get something. But if we're getting something, you're getting something. So that's the way to build a real business, is making sure that you are as aligned with your shareholders and your investors as possible. So everything we do goes back to putting your shareholder mentality first. So if we have a deal in front of us, and we need to figure out, is it a good deal or a bad deal? Well, what's the effect on the share price? If it hurts me, well, perhaps you have a better thought process of saying, how do we structure this deal properly to make sure that it delivers that value to your shareholders? So I think that's something that we're not growing just for just to grow. We're really growing to make sure we deliver that per share value.
Oh, anyone watching this, do write in and let me know your thoughts on how CEOs and boards should remunerate themselves. I think that's fantastic. Genuinely do. Okay, so given your share prices where it's at, you think it should be about $1.50. It's not. What are the things you think people should be looking at, and how are you going to help them find that information or the points that you want them to be looking at?
Well, look, we've got a few different things that are coming online. Obviously, when Blyvor in South Africa starts producing this year, that's going to be a big catalyst, and it's probably going to end up being one of our top assets within the next 2 to 3 years. You touched on Coral. It's a small acquisition, but the potential of that asset growing into something much larger is incredible. I mean, you've got a scale, basically a sliding scale royalty that goes up to 2.2%, 2.2% on Robertson, which is the extension of Cortez. Barrick and Newmont have now announced that they're putting that in production within the next 5 years, with first production in 2025. That's an asset that typically the Francos and the Royals own. And we were able to buy it before that news came out. The minute we closed that deal, the next day, Barrick came out with the investor presentation and basically gave out that news. The thing to remember about Barrick doesn't put a $1 and $2 million resource in production. They put 5 to 10 million ounce resource in production. Cortez produces 750 to 1 million ounces a year, depending on the year. So for us to have a royalty on Robertson, which you don't need additional infrastructure, everything's there. So to have that royalty within the portfolio, with the best operator in the world on their top mining camp in the world, what could you ask? I mean, so I think we're going to get more news on that over the year, plus Blyvor. So we're in a great position, and we have no debt apart from that small convertible debenture that's at these prices will likely be converted, and we're generating a lot of cash. So a lot of good things going on.
Okay, great. Vincent, appreciate your time today. Nice to catch up with you. Good luck for 2021.
Thank you.